Hey guys, so good morning. Looking forward to the day ahead. We've got a really pretty much exact opposite scenario this morning as we had yesterday, it would seem. We are punching higher on equities at this point. We got some technical situations. Just check out the DAX chart here. If I just make that a little bit bigger, just zoom in a touch. We've just lifted up and we are testing yesterday's opening high. Remember what happened yesterday? We opened higher on the DAX post election debate, where it was deemed that Clinton grabbed the victory, and of course then the DAX did pretty much nothing but sell off sharply for the next few hours. Deutsche Bank related, of course, as well as then I'll talk about both of these factors. I'll talk about the election again today. We spoke about it a lot yesterday. It's going to be a big theme, of course, for the next few weeks. So we'll talk about that. I'll talk a bit more about Deutsche as well. But just for now, we've reversed this and we're just testing that high point from yesterday. I've got a fib series on this chart, just looking back to the high we had last week, and that 50% level, 10,480, is just above that high point from yesterday. So technical resistance here from the DAX, having had a nice little burst higher. Correspondingly, you've got a bit of opposite action going on the euro dollar. So we're kind of back to normal, perhaps you might say, well, in this day and age, normal correlations where you've got a bit of euro weakness and equity strength combined. So technically, we're down through yesterday's low on the euro dollar, so decent breakout to the downside there. That's taken us down below that low we had back on Friday last week as well. Just thinking about the S&P, technically it's pretty nice and neat when you're considering what happened. Sorry, one sec. So the S&P's broken up through the double top that we had yesterday. So just before that live debate, the S&P had been selling off back end of last week in Friday's session and Monday's session. Then we had that live debate. We found support around the low on the 21st, or at least on the afternoon of the 21st. Then we punched higher off the debate and gave it all back. And key test of the pre-debate low, shall we call it, 21.33, and we launched into the European close back up all the way to the top. I'll talk about the data. Let's just show you the chart on that. I think the thing about yesterday afternoon was the economic data was surprisingly strong, and I'm just going to switch my screenshot and we're just going to have a quick look, if I can, at the chart of consumer confidence. One sec, I did have it up. Here it is. So it's just going to load up. The thing about yesterday was not only was it better than expected, but it was actually the best reading on consumer confidence since August 2007, in fact. So more than a 9-year high. Also, some of the subcomponents look pretty solid. The jobs plentiful subcomponent, that's what proportion of people think that jobs are plentiful, in that there's plenty of jobs available for them if they want to get jobs, and that jumped to 27% or something, which was also a post-crisis high. So the data yesterday from the US was actually pretty solid. The PMI number on the services side was also better than expected. So it's really kind of just all of a sudden flipped the trend, because we've been getting pretty consistently bad data from the US. If you think back to earlier in the month, we had bad ISM numbers both on manufacturing and non-manufacturing. We had an okay payrolls number, but not great. We had a bad retail sales number. But it does look like, as we've got towards the end of September, the economic data front seems to just be picking up a little bit. So anyway, this is what brought the S&P back to the highs yesterday. Very neat and tidy, the range from yesterday. We tested both sides twice perfectly, but we're up through that now. So the S&P is trading up through that double top from yesterday's session. You've got a bit of a high here back on the 21st. The 21st of September high is at 21.5750. So equities on the front foot here. And if we just talk about these two things then, Deutsche, let's talk about Deutsche, let's talk about the US election, and then we'll look at the day ahead. So firstly on Deutsche, if I show you the chart of Deutsche's share price, it's a pretty sorry looking chart, it has to be said. This is the chart looking back over 10 years, and let me just make that a touch smaller so you can see it, otherwise my head's in the way, I think, on the screenshot. 1 second. I want you to just get the left hand side of this in. So here we go, right? So you're well, it's pretty much an all-time low. Okay, what's happened this week is we've broken the credit crunch low. I say this week, we've been really testing it for the last few months, but I say this month we've broken the credit crunch low that was at 12.53, and we trade down and we're in sight of single figures here. The low we had yesterday, 10.55, that's 10 euros 55 cents, and we're gunning for a single figure share price print. If we look a little bit shorter term and just look at this year, for example, this year alone the share price is down well over 50%. Go back to well, actually this year it's down 50%. So if you go back to October last year, well then we're trading up at 28 bucks, and here we are looking at testing 10. This is obviously a pretty alarming move to the downside. So what's going on? We've been talking about Deutsche. There's going to be more news, but we did get a bit of a bounce on Deutsche shares yesterday. So if I go to a 5-day chart, then you can see how this thing stepped sharply lower into the back end of last week, and then again yesterday morning particularly we sold off sharply, and the DAX, that's why the DAX reversed, and we had a big move to the downside, giving back the election debate gains. But then we jumped higher, and actually in the end Deutsche jumped about 3% into the close, and we're higher again this morning. So we flirted with that $10, actually the low yesterday was 10.20. Wow. So flirting with $10 here, but look, we're on the up. All right, so this is because the CEO made a comment, and he said, so Curran, who's the British guy, who's been in charge of the German banking giant for 14 months, he said yesterday that don't worry, the bank is in a sound position. Okay, fine, relief. Why didn't you say that earlier? So anyway, the share price jumps. Just to put this in, I've got a chart. Well, I haven't got a chart. Zero Hedge has got a chart, which Vas is not going to like the look of, but I'm going to show you anyway. Let me make this bigger. This is a chart here mapping the Deutsche Bank share price and mapping the Lehman's share price on top of it. It's taking the Lehman's share price from the start of 2006 through till when it collapsed, September 2008, went bankrupt. If you take the same kind of time frame, Deutsche's sliding and sliding. Now, I mean, don't for 1 second think I'm telling you Deutsche are going to go bankrupt. I'm not. But Zero Hedge, being typically alarmist and bearish, like to do these things. So Fuld, who was the CEO of Lehman's, said and quoted as their share price was collapsing about 3 months before they filed for bankruptcy, he said, "We've got billions in highly liquid assets. Don't worry, we're well capitalized enough. There's no problems." And it's kind of similar to what Curran said yesterday, comfortably equipped with free liquidity. This is the message from the CEO. Obviously the message, the fact the CEO's got to say that, I mean, that's the problem. Now, what's wrong with Deutsche? Deutsche, I guess, really, like other banks in the past, they're basically guilty of that classic error of, not, when times are good, allowing the bank to expand really out of control, allowing costs to just grow and grow and grow. So basically, complacency is the word. What's happened, really, they should have begun shrinking their balance sheet. They should have begun cutting costs. They should have begun restructuring way earlier than they actually did. But look, Curran's in, the new CEO, and he's trying to do this. But is it too late? It is really the big question. What he's doing at the moment, he's looking at, and another thing that saw the Deutsche Bank share price go up yesterday, they're looking to offload Abbey Life, or Abbey National, as some of you might know it, which they're looking to get £1 billion for. So look, they've got to raise capital, and at the moment they're going to try and do this through asset sales. They're trying to sell off their China business. They're also trying to get rid of their retail business, Postbank. So this is part of their restructuring plan to slimline their operation and therefore also cut costs, because they're looking to chop 25% of the workforce as well, by the way. These are the efforts that are going on. Really, where it kind of all began to unravel is when they got, when the LIBOR scandal hit the newswires, and they got heavily fined for the LIBOR scandal, and it kind of that was the tipping point. Obviously, this week, or was it last week now, the Department of Justice suggested that they are going to be hit with a $14 billion bill for mis-selling mortgages in the financial crisis. It'll most likely be quite a bit lower than that. But if it is $14 billion, then I don't know. I mean, this is the problem, because Merkel has been asked this week, will you recapitalize? Will you step in and bail out Deutsche Bank? And she said no. Of course, she's going to say no, because she doesn't want to portray the image that the government is worried about Deutsche. You know, it's such a weird game, this, of sort of brinksmanship. On the one hand, as Deutsche Bank CEO, or as German, or as Merkel, you've got to be sounding positive. You've got to be giving reassuring messages. You've got to be saying that, you know, we are comfortably capitalized, we have got enough liquid assets available. Merkel's got to be saying we're not worried, they don't need bailing out, blah blah blah. But the fact that they're getting asked these questions more often means that things are getting worse. Obviously, well, just put it this way, to put the size of Deutsche in context, the value of their assets is 1.8 trillion euros. That's half of the size of the whole German economy. The German economy is the it's the biggest economy in Europe. The German economy is the fourth biggest economy in the world, and one bank has assets worth half of that economy. All right, we're not messing about here. Deutsche is way bigger than Lehman's ever was. So, this is a situation that could look, worst case scenario, if Deutsche did go down, they would be bailed out. There's no question of that. Germany would absolutely have to bail them out. There's too much systemic risk. Anyway, it's complicated though, because there's a lot of cocoa bonds flying about, which does mean that the shareholders, bondholders will get dragged into it more so than any other bank bailout that we've seen before, which would perhaps reduce the amount that the government might have to put up. But look, the fact we're discussing these things means Deutsche is definitely a big concern, but I don't think we're there yet. I think the Department of Justice might have a lot to do with this. Ironically, the Department of Justice could, if they slap too big a fine on Deutsche, well, ultimately it could be the tipping point. So they've got to be a little bit careful. But this is definitely something to monitor. We're going to get a lot of news flow on this. You need to be listening out for comments from Curran. You need to be listening out for any news flow on their restructuring and asset sale progress. You've got to be keeping an eye on their share price. Get it on, you can track this on stuff like Yahoo Finance. All right, Deutsche is a big story and needs to be monitored. The DAX is incredibly sensitive to Deutsche Bank news flow, of course. Deutsche is a big part of the DAX, so be on top of this. Right, let's talk about the election very quickly. The only reason I wanted to touch on this again is somebody made an interesting comment. Yes, I was reading the FT, and they said, did that post-reaction to the debate, is that a little bit of an insight into how markets are going to react after the election result? So, with regards to, and we were talking about this here yesterday, what's the best market to trade before the election event. Let me bring up the S&P chart. And let me just zoom right in, like on a, I don't know, like a 15-minute time frame. Because what happened yesterday, we had a, well, let's just zoom in on yesterday on its own here. What happened was we had a big lift off the back of the debate, during the debate and after the debate. And that's because Clinton won. So let's just say Trump risk, all right? Let's just call it Trump risk. Is Trump going to win the election, yes or no? So there's an inverse correlation, it seems, between the S&P and equities globally, in fact. There's an inverse correlation between Trump winning and equity prices. So what happened in the debate yesterday was the chances of Trump winning the election dropped and equities rallied hard. Now, look, we gave that all back. A lot of that was Deutsche Bank's fault, but it was more than that. It's more about the fact, well, actually, are these TV debates, are they that important? Are they going to change the result? But we spoke about that yesterday. But in the short term, I mean, I think after the election, if Clinton wins the actual election, well, obviously this reversal that we saw yesterday, assuming Deutsche is still alive, this reversal we saw yesterday wouldn't happen. A lot of yesterday's reversal was off that idea that, okay, actually it doesn't matter. Trump's not going to be impacted by his poor performance in the debate. Obviously, if he doesn't win the election, well, that's it. That's done. Trump's done. Goodbye, Donald. Get back in your box. We don't have to hear you speak anymore. We'd get a rally in equities and it wouldn't reverse, or at least not anytime soon. So I think equities higher off a Clinton win, equities lower off a Trump win. This was the litmus test yesterday off that debate. I think that would be a clear trade. With the dollar, it'd be the opposite. If Trump wins, dollar strength because he's hawkish. So I think you need to be aware of this. Trump is hawkish. He doesn't like the Fed. He doesn't like the Yellen and her dovishness, so you're most likely going to get hawkish policy response if Trump wins. So you're going to get the dollar weaken. If I just shift my chart to the euro dollar chart, so you should see dollar strength off the back of a Trump win, and dollar weakness therefore. If Clinton wins and we get the status quo kept, here's that move yesterday. Hang on, where Actually thinking about it, sorry, I did look at this yesterday and I was a little bit surprised about how little reaction we got on the euro dollar actually during the actual debate. We didn't move that much actually. That's interesting. But I would say you would get dollar strength if Trump wins. You'd get dollar weakness if Clinton wins. So that's something to think about. Gold was really interesting yesterday. Just from the point of view that it really reacted very hawkishly. We broke below the low point we had on Monday and sold off sharply. The gold had a hawkish reaction. We got a bit of dollar strength yesterday as well. So that would be perhaps a trade. This will be a difficult one. If Trump wins the election, well, would you get a flight to quality, safe haven bid tone into gold? Or would it sell off because we might get a hawkish policy response? So actually buying gold off a Trump win might not quite be the free money trade that people were thinking of. So you've got to be aware of that. Gold's more downside for gold this morning, breaking below yesterday's low. Anyway, so we'll see. Look, there's 2 more live debates to come. Obviously, we're going to get news flow on the election every day now until November the 8th when the election actually happens. Let's just touch on oil. A lot of action. Yesterday, if I go to my oil chart, we had a big sell-off yesterday afternoon. Technically quite neat. Slamming into the low point we had on Friday and nicely capping the downside there, and then we consolidated and we're kind of just chopping around now. This helped with a bit of downside for that equity space yesterday. As well, although equities did then bounce because of the US data. This is news flow that, well, there isn't a deal. There is no deal on an output freeze. Getting a little bit fatigued by this news flow. There's a graphic I'm going to show you on this. Let me just switch my screenshot. Here we go. This is the one. I think this is out of date, but anyway, look, this is looking at the producers. So like your OPEC and some non-OPEC important producers in here, like Russia, of course. So this is looking at, do you support a freeze? And at the moment, orange bar, what was your production in August? And what the grey behind that is, what's your potential production? Okay. Now, the thing about this is that maybe to look at Iran, I mean, I personally think, even though Iran is in this category of countries supporting a freeze, I think that's obviously wrong. Whoever produced this, which looks like the Wall Street Journal, obviously that's not right. I don't know why they put them in that category anyway, but still proved entirely wrong, because Iran themselves yesterday said they're not interested in a freeze. So they really should be down in, well, opposes a freeze, actually, with Indonesia. That's where Iran should be. The thing I want to point out, though, is the grey bar for Iran is 4 million barrels a day. Basically, the way I see it, Iran aren't going to agree on a freeze until they've managed to get back to their full output capacity, and then they're going to go, yeah, let's agree a freeze. Until that happens, I think the idea of them agreeing on a freeze is fantasy. You're now getting reports in the press that, okay, now, given discussions this week, it looks like now they're probably going to be in a place to agree a freeze in November at the next OPEC meeting. I mean, you've got to realise they've been talking about an output freeze for the entire year, when we're almost into month 10 of 2016, and they've been apparently there's been a freeze agreement on the table for 10 months and it hasn't happened. I think if Iran get to 4 million barrels a day, well then fine, they'll agree a freeze, because they'll freeze production at their maximum output. Libya as well as the other one, I don't know whether they'd support a freeze either, given that they're a fraction of what they could be producing. So anyway, some ups and downs, volatility, and there's been some great trades off this stuff. So I shouldn't criticize this. This does provide dollars to the trading P&L account if you're prepared to be aggressive off these news flow. Again, yesterday, definitely a good trading opportunity, at least $0.50 trade off the back of that comment. There was trades at the back end of last week off the back of this news. I would say now, though, going forwards, as this meeting comes to an end and there is no deal, then obviously headline sensitivity is going to drop. So here we're going to return back to our favourite, which is the Department of Energy oil data. So let's just finish the briefing by looking briefly at that. And here we got numbers last night from the API where we had another drawdown. And check out this chart. Look at the circle here. We're just circling the last 4 weeks. And we've actually had 4 drawdowns in a row, basically. All right, one of them's about flat. But the more important stat is that this is the biggest. So the last 3 weeks have seen the biggest drawdown in crude inventories, which is over 4%. That's the biggest 3-week drawdown since 2013. So we've got more than a 3-year record in terms of drawdowns over a 3-week period, or even over a 4-week period. So this should be supportive for price. Of course, price did. If we just flick to the chart now for oil, we did jump a little bit higher off the numbers from the API, but all that happened was we got back to the kind of afternoon high around $45, which is the pivot level around that area this morning as well. So be aware of that. We're just edging and looking like we want to try and test that. But do bear in mind that perhaps we're going to switch away from this OPEC headline stuff now and think more about the inventory situation. And we got a bullish print on crude, also Cushing crude down 832,000. Gasoline, big drawdown last night from the API at 3.7 million. Drawdown on distillates as well. It was a drawdown across the board. We had expected a 3 million barrel increase on crude, but it dropped 750,000. So bullish on the inventory. So we'll see if that can get prices up above $45. But of course, the Department of Energy numbers come at 330. So just to finish with the calendar, it's actually quite a quiet day for economic data. In fact, there's nothing really of any interest on here. Even the durable goods numbers at 130 won't be that. They're not tier 1 for sure. So really, perhaps it's the oil numbers at 3:30 that are the most market sensitive data point. But if I scroll down, I literally can't remember seeing so many speakers scheduled on one day. I can't remember seeing such a long list for a long time. So you've got a huge amount of commentary. Most of this is central bank stuff, of course. We've got Draghi talking. He's supposed to be talking at 9 a.m. This is the ECB annual research conference. Whether he's going to make any comments about policy, I don't know. We'll have to see. We've got, and he did touch on the Brexit. He was quite aggressive on Brexit comments last week. Whether he talks about Brexit, did you see Sarkozy's comments on Brexit yesterday, which were pretty interesting, I thought. Sarkozy basically said, if I win the election, which is in March next week, Will's keen on this, if I win the election, the day after I'm flying to Berlin and I'm going to put on Merkel's table a draft to alter the EU treaty. Europe's not working. Basically, he's trying to gain support from the National Front voters. He's saying Europe's not working. I'm going to fly to Berlin and give Merkel the blueprint for how to change the EU. The day after, I'm going to fly to London and I'm going to put it on Theresa May's table. I'm going to say, stay in. Change your mind. Stay in a new Europe. So that was quite interesting and something that needs to be kept an eye on. For Brexit risk, Sarkozy's polling in the run-up to the election could be pretty interesting. Anyway, that was a sidetrack. You got Bank of England Shakif at 9 also, so that's now. So I'll get off the mic in a minute. This afternoon, Kashkari from the Fed, Draghi again. We got more. That OPEC meeting is carrying on, so you never know. I guess you could get a last-ditch deal. Phenomenally unlikely. Bullard talking at 3:15. Draghi again. Wow. Draghi's got 3 speeches today at this conference. He's a busy man. Evans and Mester and Yellen at some point also talking. But this is supposed to be on bank supervision, so unlikely, I would suggest, to be any policy comments. All right. I'm going to leave you to it. That's enough from me. Might be a quiet morning, no data of any note, but just keep your eye out for any comments from Draghi. He's due to be on the wires right now.
No
Thanks a lot.
immediate comments seen from